Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. My apologies once again for this messy and complicated looking chart. I assure you that it is necessary for me to interpret where we have been, where we are now, and what the opportunities may be ahead. Okay, so the pattern construction that led to the market moving higher started in between mid-March to early May with the bullish shift pitchfork, which was breached, then broken last week, only to perhaps seemingly start to be repaired this week. We are right now below the broken upper time, which is currently at 308.95 and very close to the April 20 low, 2011 high above April 2011 high at 303.40, and the May 2011 high above that is at 309.90. The next longer term pattern I'd like to discuss is the large bright red April to late October this year ascending wedge pattern, currently 258 to 272. This pattern had been biding its time since late spring until 10 weeks ago when we saw a significant false break higher, which only resulted in a small double top over September, an Adam and Eve type top. There was also another recent pattern, not so well defined but still there, and one that I thought last week might have possibly been triggered at the end of October. It was a mid-August to late October head and shoulders pattern, with the previously mentioned double top being the split head. So you've got shoulder, split head, and then you've got shoulder. So between 7 and 4 weeks ago, the market breached the neckline, currently at 254.85 on the downside. But then the aspect of this pattern changed, and instead of being a head and shoulders top, it became 4 weeks ago a head and shoulders continuation pattern, rallying to new highs this month. And that was not all, as in the process of rising higher, prices reached last week the primary target X for the bright red ascending wedge pattern up in the 307.40 area, as well as later that same week the initial secondary much harder to reach target X4 up in the 319 area, and then on top of that a further target X1, one I hadn't really discussed because it was so far away, but a final target topside up in the 333.55 area on Friday before prices toppled over with an immediate countering bearish dark cloud cover pattern, which have so far seen a gapping move lower today. This big rally nevertheless left one jarring feature which I spoke about last week, and that was that November was a monthly key reversal up, a highly unusual pattern to see at the top of the market. I'm going to think about the implications of such an odd combination. A monthly key reversal up, but right at the top of the market. It's going to take me a while to think about that one. London coffee. 22 weeks ago, I initially drew a bullish Andrews pitchfork on my daily chart. 15 weeks later, I finessed this into a shallower bullish shift pitchfork for the same move. The latest effort last week saw the market push up over the upper time, currently at 52.32, for the first time since the failed attempt over late August to very early October, but not sustain the move, as last Friday we had a combined key reversal down, as well as a day two in a two-day bearish separating lines pattern, which has seen a follow-on lower today. Now, another pattern which also emerged from earlier this year and is highlighted in bright red on my daily chart is the late April to early September, quite large ascending wedge pattern, currently 48.30 to 53.35. The lower uptrend had been reinforced and also helped in reinforcing both the dark blue middle time, currently at 46.71, and the medium moving average, currently 46.87. This despite one significant break higher and another break lower, outside the bright red ascending wedge pattern. These disrupted a pattern so much, despite the market being back within the ascending wedge pattern today, that I am thinking of downgrading or even retiring it completely as a pattern. Instead, I may look to a newer and larger pattern that encompasses all the significant recent elements, a pattern such as the dark blue highlighted, shallower bull channel, currently 43 to 26 to 56.96. It is not ideal, as it is quite large, but we do need to have some aspect to what this market is doing. However, there is still one pattern that has worked in recent times, and that is the early October to early November descending wedge pattern. The break higher late 4 weeks ago had a primary target X in the 50.01 area, with a secondary target, a much harder to reach target, up in the 54.17 area. I originally was not too sure about these, but I felt obliged to place them. Well, last week both primary and the secondary target were reached, the latter as part of the final shot higher midweek last week that finally ended with a combined key reversal down and day 2 in a 2-day bearish separating lines pattern last Friday, which we have seen a subsequent gapping move lower follow on today. This final stretch higher also left a legacy, as November became a monthly key reversal up right at the top of the market. I'm not happy because I'm going to have to think about the implications of such an odd combination, a monthly key reversal up, but right at the top of the market. It's going to take a while for that, and I'm still going to have to think about it.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.